Gold just hit $5,170 per ounce. Let that number sink in for a second. $5,170 for 1 ounce of gold. And here's the part that should make every single investor watching this video sit up straight. That's not the ceiling. That might just be the floor of what's coming next. Today, March 11th, 2026, the markets opened with gold futures at $5,162.40, climbing to a high of $5,192.60 before pulling back slightly. And silver? Silver is quietly doing something that most people are completely sleeping on. Something that historically has signaled one of the most explosive moves in the precious metals market. If you have any money sitting in silver right now, or if you've been thinking about getting in, you absolutely cannot click away from this video. What I'm about to share with you changes the entire conversation. Welcome back, everyone. I'm Yali Jiang, and you're watching Silver Signals, the channel where we cut through the noise, follow the real data, and talk about precious metals the way they deserve to be talked about. Whether you're in Mumbai or Manchester, whether you're watching from Lagos or Los Angeles, today's episode is built for you. Because what is happening in the gold and silver markets right now on this Tuesday, March 11th, 2026, is not just a local story, it is a global story, and it is unfolding in real time. So if you haven't subscribed yet, right now is actually the perfect moment. Hit that subscribe button and ring the notification bell because the way these markets are moving, you do not want to miss a single update from this channel. Now let's get into it, because we have a lot to cover today. Let's start with the numbers on the ground, because this is where things get really interesting. In India, which is one of the world's most important barometers for precious metals demand, gold prices are reflecting today's global momentum in a very powerful way. In major cities like Mumbai, Delhi, Chennai, and Kolkata, 22-karat gold is trading in the range of approximately 48,000 to 49,000 rupees per 10 grams, and 24-karat gold, the pure stuff, is pushing above 51,000 rupees per 10 grams in many markets. Now for context, just a few months ago, the idea of gold breaking and holding above 50,000 rupees per 10 gram was considered optimistic. Today, it is reality. And on the MCX, that's the multi-commodity exchange of India, gold futures are gaining, tracking that global price movement we're seeing in international markets. The MCX is one of the most sensitive real-time indicators of how international prices translate into domestic demand, and right now it is telling us something loud and clear. Buyers are not stepping back, they are stepping in. Silver is having its own moment too, and I want you to really pay attention here, because the silver story today is arguably even more compelling than the gold story when you zoom out and look at the bigger picture. Across Indian cities, silver prices are climbing. We're seeing silver trade in a range that reflects the international spot price push, with strong buying interest from both retail investors and industrial buyers. In the US, silver spot prices are moving in sympathy with gold, and that gold to silver ratio, that critical number that every serious precious metals investor watches, is sitting at a level that has historically preceded some of the most dramatic silver price accelerations in modern history. We'll come back to that ratio and why it matters so much in just a few minutes, because that is actually the aha moment of today's video. But first, I want to explain exactly why gold and silver are both moving right now, because the reasons are critical, and they are deeply connected to things happening in the world today that affect all of us, no matter where you live. The first and most dominant driver is the US dollar. The dollar has been weakening, and when the dollar weakens, gold and silver, which are priced in dollars globally, become cheaper for every other currency in the world. Think of it this way. If you're a buyer in Europe or Asia or the Middle East and suddenly your currency buys more dollars, you can buy more gold, more demand pushes prices up. It's that simple at the macro level, even though the mechanics underneath are layered and complex. Today, March 11th, 2026, the dollar weakness is not an accident. It is the result of market uncertainty, investors' pricing and concern about U.S. fiscal policy, about debt levels, about the longer-term trajectory of the American economy. And when uncertainty rises, the dollar often suffers. And when the dollar suffers, gold wins. It has worked this way for decades, and it is working this way today. The second driver is geopolitical tension. And right now we are living through a period of geopolitical noise unlike almost anything we've seen in recent memory. The situation with Iran is front and center today, with reports of what officials are calling one of the most intense days of U.S. strikes on Iran, and Tehran now threatening to block oil shipments through the Strait of Hormuz. The Strait of Hormuz is the narrow waterway through which approximately 20% of the world's oil supply passes every single day. President Trump has already responded with direct warnings of death, fire, and fury if that blockade happens. Now, I'm not here to make political commentary. This is a precious metals channel, and my job is to help you understand how global events connect to the assets you own or are thinking about owning. And the connection here is direct and undeniable. Geopolitical crisis drives safe haven buying. Gold and silver have been the world's safe haven assets for over 5,000 years. When the world feels unstable, people reach for things that hold value outside of any government's control. And that is precisely what we are seeing today. Crude oil is the third factor you need to understand, and this one is a bit nuanced. Right now, WTI crude, that's West Texas Intermediate, the US benchmark, is trading around $75 per barrel, while Brent crude, the international benchmark, is sitting slightly higher in the $78 to $80 range. Oil spiked sharply on the Iran news before pulling back. That kind of volatile snap move is exactly the kind of thing that makes institutional investors nervous. And nervous institutional investors diversify into gold, add to their silver positions, and rotate out of equities and into hard assets. This is the playbook, and it's playing out right now in real time today, on March 11th, 2026. Now here's where I want to pause and genuinely ask you something, because I'm curious what people watching this channel from different parts of the world are seeing. Are you feeling the effects of these global price movements in your local market? Whether you're in India watching the MCX, in the UK watching the pound-denominated gold price, or in the Gulf watching how oil prices are affecting your investment decisions. Drop a comment below and tell me, are you buying silver right now? Are you holding gold, or are you watching and waiting? I read every comment on this channel, and I genuinely want to understand what the Silver Signals community is experiencing on the ground. Let's talk about monetary policy for a moment, because this is the fourth and arguably the most structural driver of where gold and silver prices are heading. Not just today, but over the next 12 to 24 months. Major central banks around the world are navigating an incredibly difficult environment. The Federal Reserve in the United States, the European Central Bank, the Bank of England, the Reserve Bank of India, all of these institutions are trying to balance the competing pressures of inflation that hasn't fully died, economic growth that is slowing in key regions, and debt levels that are at historic highs in many developed economies. Here is the simple truth that every serious investor needs to understand. Central banks cannot raise interest rates aggressively without causing serious economic pain. Rising unemployment, falling asset prices, potential recession. But if they cut rates too quickly, inflation could reaccelerate. They are trapped, and when central banks are trapped, hard assets like gold and silver tend to thrive. Because gold doesn't depend on a central bank's decision-making, silver doesn't require a government's promise to hold its value. They just are what they are. Finite, real, physical assets that the world has trusted for millennia. And that is exactly why, in a world of trapped central banks and uncertain monetary policy, the case for holding precious metals has never been stronger. This is why central banks themselves have been buying gold at record levels over the past few years. Think about that for a moment. The institutions that print money and manage currencies, the very entities that supposedly compete with gold, are buying gold aggressively. In 2023 and 2024, central bank gold purchases were among the highest on record. And in 2025 and into 2026, that trend has continued. China, India, Turkey, Poland, major central banks across multiple continents are adding gold to their reserves. And when the people who create the world's currencies are buying the world's oldest currency, that tells you something profound about what they believe is coming. Now, I want to bring this back to silver because this is where today's video has been building. This is the twist, the insight that rewards every viewer who stayed with us this far. Here's what most casual investors don't understand about silver. Silver is not just a precious metal, it is also a critical industrial metal. Solar panels require silver, electric vehicles require silver, semiconductors require silver, and the green energy revolution, which is not slowing down regardless of short-term political noise, is a massive, structural, decades-long driver of silver demand that has nothing to do with inflation or safe haven buying or geopolitics. So silver has two completely separate demand engines running simultaneously. The investment demand, which spikes during uncertainty just like gold, and the industrial demand, which grows steadily as the global economy continues its electrification and digitization. Now here's the part that changes everything. And this is the moment I promised you at the beginning of this video. The gold to silver ratio right now is sitting at roughly 100 to 1, meaning it takes approximately 100 ounces of silver to buy 1 ounce of gold. Historically, going back decades, the average gold to silver ratio has been somewhere around 60 to 80. And when the ratio gets stretched this far above its historical average, it has almost always eventually snapped back. And when it snaps back, silver dramatically outperforms gold. Not by a little, but by a lot, just like in the 2020 bull run when silver went from around $12 per ounce in March to nearly $30 by August. 150% gain in 5 months, while gold gained roughly 30% in the same period. The ratio was stretched before that move. The ratio is stretched right now. Silver at current prices relative to gold is, by historical standards, extraordinarily cheap. And that doesn't mean it goes up tomorrow, because markets can stay irrational longer than any of us expects. But it does mean that for patient, informed investors who understand the long game, silver at this ratio represents the kind of asymmetric opportunity that comes along perhaps once or twice in a decade. And think about this. We started this video talking about gold at $5,170 per ounce, a number that would have seemed almost science fiction just a few years ago. Gold has made that journey, repricing for the new reality of dollar weakness, geopolitical instability, and central bank buying. Silver has partially repriced, but if that ratio normalizes even back to its historical average, silver at current gold prices would need to be trading at somewhere between $65 and $85 per ounce. And today, it is trading at a fraction of that. That gap between where silver is and where history says it should be relative to gold, that is the signal. And that is why this channel is called Silver Signals. Not because silver is a guaranteed easy trade, but because when you know how to read the signals, the picture silver is painting right now is one of the most interesting pictures in the entire investing world. Let's bring this home, because today has been a dense, rich episode, and I want to make sure you leave with clarity. Here is what we covered today, March 11th, 2026. Gold futures opened at $5,162, touched a high of $5,192.60, and is reflecting a global environment where every single major macro force, dollar weakness, geopolitical tension in the Middle East, oil price volatility, and central bank policy uncertainty, is pointing in the same direction, up. In India, MCX gold and silver prices are climbing in lockstep with global trends, with city-wise prices across Mumbai, Delhi, Chennai, and Kolkata showing the kind of sustained strength that isn't a one-day spike. It's a trend. Silver is climbing alongside gold, but the gold to silver ratio tells us that silver's full repricing relative to gold has not yet happened. And when it does, when it historically has, silver moves faster and further than almost any mainstream asset class. I don't say any of this to create hype. I say it because the data says it, the history says it, and the macro backdrop that exists right now on March 11th, 2026, creates the exact environment in which precious metals have historically proven their worth as wealth protection and wealth building tools. So here's what I want you to do. First, do your own research, always, and use videos like this as a starting point, not an end point. Second, think about your own situation and ask yourself what your current exposure to precious metals looks like. Is it proportional to the risks you're seeing in the world around you? And third, and I genuinely mean this, share your thoughts below. Tell me where you're watching from. Tell me whether you're in silver and gold or sitting on the sidelines. That conversation in the comments is one of my favorite parts of making this channel. If this video gave you value today, if it helped you understand the gold and silver markets even a little bit better, even just gave you one insight you didn't have before you clicked play, please give it a like. It takes 2 seconds, and it genuinely helps this channel reach more people who are looking for exactly this kind of honest, grounded analysis in a space full of noise and hype. And if you're not subscribed yet, what are you waiting for? The markets are moving, the signals are firing, and you want to be here for what comes next. I'm Yali Jiang. This is Silver Signals. Stay curious, stay informed, stay patient, and I will see you in the next one.